G'day guys, welcome back to Mango Invest. In this video, we're going to do a portfolio update. We've had, a massive portfolio reshuffle. We've sold a fair amount of companies in order to, bolster some higher paying dividend companies. But we'll go through that in just a bit. We'll just quickly show you the portfolio change of the last week. So we're currently sitting at $273,000 in total. In the day, we're up just under $3,500, largely thanks to Apple and Microsoft. They've rallied, in the last sort of 3 months pretty well. So the total amount of profit so far in the portfolio is just over $17,000, and the current cash position is sitting at zero. So all the dividends and deposits that I've received over the last week has just gone straight into all the dividend paying companies. The biggest company that's performed the best is Microsoft over the last 3 months. If we were to go to the 3-month period here, as you're seeing on the top there, they're up by over 33%. We'll look at the 3-year period, and you can see that sort of rally within the last sort of 6 months that they've had there. So that's contributing to most of the gains of the last sort of 3 to 4 months. Microsoft and Apple. Right, moving on to the buys and sells within the portfolio. So this is the biggest reshuffle that I've really ever done. I don't usually sell companies. I generally, tend to buy and hold for a very long time. But I'll start off with Pfizer, and why I sold those guys. There's a lot of other higher dividend paying companies that have consistent paying dividend companies. They grow their dividend at a high percentage rate every single year. And Pfizer was, they were very consistent, although they weren't raising that dividend as much. And then I had a look at the financials of the company, and the revenue was inconsistent, the operating income, the earnings per share was inconsistent. They started to slowly decline in value, and I just thought that money I could probably best deploy in companies that were a little bit more consistent and growing their dividend over time. So I sold it for $7,500. I think overall the amount of profit I got from that was less than $500. It wasn't really that much, but at least I sold it for a profit. And with that, I bought O for $2,000, Jeppy for $3,000, and LTC for $2,600. So right there, so with those companies, they're actually sort of at a discount at the moment. I know Realty Income Corporation pay a nice dividend yield of just under 5%, and they've been growing their dividend quite a bit. Jeppy has a massive 10 to 11% dividend yield. They grow their dividend by at least 15% every single year. And LTC, a real estate investment trust that are declining in value quite a bit, although I did a video a couple of weeks ago detailing they've made 18 acquisitions of more properties within the United States, and yes, they've taken a little bit more debt in order to get those properties. But with that debt, they're only going to get more revenue, and they're going to generate more money from that debt by acquiring those 18 properties. So I think LTC is looking pretty good in the long run. But that bumped up my dividend yield, like just from selling Pfizer, that bumped up my dividend yield like quite a bit. And then I've spoken about BHP a couple of times within the last sort of couple of videos. Like, they were going well. They've got they had a high dividend yield of 10%. They've then had to cut that dividend in half to 6 to 7% due to income issues. They weren't making as much profit for that sort of quarter and all that sort of stuff. So I just found BHP to be a little bit inconsistent, and I could sell that company and then deploy that profit into higher paying dividend companies again. Which I sold it for $16,000. I believe $3,000 was profit, and I straight away deployed that into $10,000 into Jeppy, $3,800 into QILD, and then even another $3,700 into LTC. So QILD is just similar to Jeppy. It's a covered call ETF. And all the call options that they sell, all right, that gets deployed into dividends for their shareholders there. So I'll show you the changes in the dividend increases just in a minute. And then again with LTC, that just bolstered my annual dividend income, by an extra couple of hundred, which is awesome there. And then I made a couple of deposits, and just with a couple of dividends, I noticed that Alibaba was trading under $80, so I put another $200 into them, and then AT&T as well. So I put another $765 into AT&T. Due to the stock price, declining even further, I took that as an opportunity to buy more shares. All right, heading over to the deposits. Okay, so the 26th of April, right, another $1,300 deposit, and the 19th of May, right, a rinse and repeat, and then on the 25th of May, right, just under $1,000 there. So, in a space of a couple of weeks, I've placed in over, what's that, like roughly $3,000 into the portfolio to again place that into high dividend paying companies to increase that annual income over time. Now I just want to move over to track your dividends just so you can see how much money that I'm actually going to be making. So here you can see the $273,000 portfolio, right, with an initial yield of 4.69%, but the yield on cost due to owning the companies over time is sitting at a 5% dividend yield. Now I want to talk about this annual income a little bit more. So it was sitting at $12,000 a couple of months ago, and then with BHP cutting their dividend and a couple of other people cutting their dividend, it went straight back down to like just under $11,000. So just by selling BHP and Pfizer and deploying some of the deposits and other dividends into JEPI, SCHD, and Realty Income Corporation, all those really good dividend paying companies, it's put my annual income straight back up, just under $13,000. So this yield on cost was sitting at 4.6%, and it's just skyrocketed up to 5% there. So a massive increase just in the annual distributions there. And another plan that I'm thinking of doing, with Microsoft performing so well, it's now pretty much coming up to an all-time high. I'll probably look to slowly sell off, 5 shares sort of every week, which will total, a couple of $1,000s here and there. And I'll slowly average down that position into higher paying dividend companies. And I want to try and get this, annual income up to $20,000 by the end of the year. So that's the portfolio goal, is the road to $1 million of equity, and the annual income by the end of the year going up to $20,000 there. I think it's very achievable with the rate that we're going at the moment. But just all the cash that I deployed into JEPI. Okay, if we were to scroll back up here. Yep, there we go here. So JEPI just in the middle of the screen there. So we're now up to 588 shares at an average price of $55.76. The yield on cost that I've got so far is 10.93, and the annual income is sitting, just under $3,600. So just a couple of weeks ago, that annual income was only at, I think it was like $2,000, and just by deploying, I think what was it, like $13,000 by selling BHP and Pfizer, it's gone up by $1,500 just for JEPI, and they pay monthly, so I think it roughly equates to just over $300 per month just from JEPI alone, and that's in USD as well. So when you translate that to Australian currency, it's sitting at like $500 to $600 every single month just from that one company, which is awesome. Some other news that was really good for the dividend portfolio is we've had a couple of dividend increases. So Canadian banks, so the Bank of Montreal increased their dividend by 3%, the same as the Bank of Nova Scotia, and that they increased their dividend by 3% as well. So although it's not like a massive dividend increase, I like to see the companies increase their dividend every year by, at least, 8 to 10%. Some really good companies increase their dividend by 15%, like SCHD and JEPI and all those good ETFs there. But 3%, at least they're growing, at least they're remaining consistent, and it's only bumping up my annual income just at the top there even further, which is really good. Another one, McDonald's, they declared $1.52 dividend, which is no change. That was their third dividend payout for the year. So hopefully after the next dividend payout, we'll look to see an increase of 8 to 10% there, but we'll just have to wait out for the news for that one. And moving over to my dividend tracker here. So this is a spreadsheet. I input all the dividends that I earn manually every single month, right? And that gets populated into a chart here. So in the last month, we made $1,284 worth of dividends there. So we're hoping to see an increase in the next one. And then this populates an average yearly income. So you can see like a nice linear progression. So I've been investing, since August 2019, and all the dividends just keep increasing over time. And then we've had at the last minute a dividend cut by BHB and a couple other companies. So yearly average income is $9,700. But Track Your Dividends is saying, that I'm expected to earn just over $12,000 or just under $13,000. Okay, because I have, made it or have done a little bit of a portfolio reshuffle, so it is going to be a little bit higher. But this sort of graph here is the dividends that I have received in the past, and it's populated an average sort of annual income there. So moving down to the monthly income, right, same sort of trend, just lesser numbers. So average monthly income is sitting at $808, but that was before the portfolio reshuffle. So those numbers are going to increase even further. But I'm going to make a video at the end of the month, and that's where I'll input all the new dividends for the month of May, and that way we can see the increase there. So wait out for that video. That'll be released on the 1st of June. So make sure you subscribe and thumbs up so you do see that extra content. Lastly, if you do want to sign up to Stake for a free stock, this is my my code here, just ChrisM965. It'll prompt you when you first open the website to create an account. You put that referral code in there. I'll get a free stock. You'll get a free stock. Okay, it's free money. Why wouldn't you do it? But that concludes the video, guys. Thanks for watching. If you did enjoy the content, make sure you subscribe and thumbs up. It really helps out the channel. And I'll catch you next time.